Welcome, and thank you for tuning in to the American Investor Show. Please click subscribe if this is your first time listening. From trader and CEO interviews to breaking news about companies you won't hear anywhere else, nobody does a better job at keeping you in the know when it comes to penny stocks. The term penny stock generally refers to a security issued by a very small company that trades at less than $5 per share. Penny stocks are extremely risky, yet they offer rates of return on investment not seen anywhere else. The host, guest, and callers are not registered financial advisors licensed by any government entity, and therefore, the following should be considered entertainment. The host, guest, and callers disclaim all liability in the event any information, commentary, analysis, opinions, advice, and/or recommendations prove to be inaccurate, incomplete, or unreliable, or result in any investment losses. Before investing in penny stocks, you should consult a professional to determine what strategy may be best for your individual needs.
Yes.
Now, without further ado,
ladies and gentlemen, thank you so much for joining me in the building right now. I am live. Been a minute since I've been on, been taking some classes and whatnot. Ladies and gentlemen, I got a good friend of mine on. We've had him on the show before. Do me a favor and press that like button right now as people slowly come into the chat room. Press that like button right now. Click subscribe if this is your first time here. Ladies and gentlemen, I have the author, speaker, extraordinaire historian. I have Jonathan Bogan in the building right now. John, appreciate you for coming on the show, man.
Thanks. I appreciate you having me back.
So, ladies and gentlemen, just to let you know, I have all of his information in there. He's just joined YouTube. He's got quite a bit of videos on the platform already. So, in the description, you will find his YouTube channel. You also find a link to his book and his Twitter. Please do him a favor, do me a favor, and subscribe to all of his social media platforms. I'm going to tell you that now because you're going to be blown away by the information he's going to be providing. And since our last episode, this is our fourth time conversing with Jonathan, and we've talked a lot about the economy, and we're going to continue to do that today, and also some social issues on the back end. John, obviously, I know. Let's start off with, what everybody's talking about right now, particularly individuals who watch my show, is this Amazon situation, okay? This Amazon situation has been quite a unique one, being that we know that the company came out and, literally got, almost 100 different U.S. cities to bargain, to basically give up everything that they own to have this privately traded company or a publicly traded company that's owned by shareholders and not the people to come to their cities in hopes of Amazon spurring development, spurring jobs. But in exchange, again, these cities gave up quite a bit. Before we talk about the cities that did win, I wanted to kind of talk about, some cities that offered that are now, putting out what they offered. And, one city in particular I want to start off with is Nashville. Now, Nashville, Tennessee, not a rich city by any measure. In fact, 33% of people who live in the city of Nashville earn less than $30,000 a year. Yet the city of Nashville offered Amazon nearly $100 million in tax incentives. I mean, in my opinion, John, this is basically, a publicly traded company forcing cities to have their citizens, who many of them don't own stocks, and never ever had a stock before, to take on basically the job of creating shareholder value for people who don't live in the city and will never visit Nashville. Tell us a little bit about how you feel about that and how that intertwines when we talk about classical economics.
Yeah, this is really one of the worst things about government and politics is that this is just corporatism. It's cronyism. The people in power are using the money of the people to treat a company, Amazon, in a way that it doesn't treat other companies. This is just, this is a misuse, just one of the top misuses of taxpayer dollars. These companies are effectively these governments, these cities and state governments are just effectively buying Amazon and buying other companies. They are giving them special privileges, tax breaks, tax incentives, so that they can set up a plant or set up some operations there where they're creating jobs. But businesses should be willing to go to these places without these benefits because the environment is better. This is bribery. This is corporatism. This is government being in bed with big business. And between, I think, New York and Virginia, there was over $2 billion in incentives being offered that Amazon took. And that's why Amazon has said they're going to split their headquarters between New York and Virginia because they were given $2 billion in tax incentives. So Amazon, and keep in mind, this is $1 trillion company, right. One of only 2 trillion-dollar companies in the world, as if they need, this is pennies, but yet it's pennies to them, but it's everything for the citizens of these cities and states. So this is, it's so ugly because government should not be picking winners and losers. Government should just be treating everyone equally under the law. And if you're going to give tax incentives like this to Amazon, then you need to be willing to give them to everybody, every company, whether it's a small business or medium size or big business. You should be treating everyone the same. And that's the problem with the income tax code, is that it allows you to discriminate against people based on their wealth. It allows you to play favorites with businesses who are politically connected. And they spend so much money, these businesses, lobbying for this stuff. They spend millions and billions of dollars lobbying for favors, and they get them. And whoever has the most money gets the most favors. That's the complete opposite of fairness. That's the complete opposite of what a free market is. A free market means nobody gets special favors or privileges. Amazon should be willing to move to New York and to Virginia because these states have the lowest tax rates, the lowest level of regulations, and the highest percentage of citizens who can function as employees of Amazon. In fact, the opposite is true. New York is one of the highest, if not the highest, tax state in the country. And if you have to offer billions of dollars to bring a business in, then what that really means is you have a terrible business environment. Because if you had a good environment that was favorable to entrepreneurs, you wouldn't have to bribe them with billions of dollars. They would just want to come there because it's easy for them to hire people, to employ, to fire people, to open up a new plant. If you have to give them all of these financial incentives, what you're really saying is we actually have a really crappy environment, and we've got to sell out our people and the funds that we use for other things like infrastructure, housing, or other things that, police and anything that government funds were already allocated to. We're going to draw those funds away from those institutions, from those projects, so that this one company can set up their plants and operations here. So it's cronyism, it's corporatism, it's despicable, it's the government picking winners and losers, And ironically, it highlights the fact that these states that are getting all of the Amazon plants and headquarters are the states that are really the worst places to go in order to set up operations, which is why they have to bribe so heavily in order to get someone like Amazon, like Apple, or whomever, a trillion-dollar company, to come in.
And it's so funny and John, and absolutely terrible, John. And again, thank you to everybody who's watching. Please press like. Again, I'm talking to Jonathan Bogan, author, speaker, and ladies and gentlemen, please, again, go to Amazon, click on his Twitter link, click on his new YouTube page, and support and subscribe to all of his social media. He's on YouTube, a lot of great videos on YouTube. Let's get his subscribers up right now. Go ahead and click that YouTube link and subscribe to Jonathan Bogan's page. And again, John, you talked about how these are the worst states for Amazon to go to, and you're absolutely right. I mean, these are all democratically run states for the most part. Their Congresses or their state representatives are all dominated by Democrats. Yet these are companies, or excuse me, these are parties that will talk about, yeah, we want workers' rights. We want to provide them with a $15 minimum wage. Yet Amazon has been a huge violator of workers' rights and of pushing costs onto taxpayers, the very thing that this party or that party, the Democratic Party, talks that they're against. So I just found it so ironic that they would bring in a company that's a major violator of the things that they fight against. With that being said, as traders, we also talk a lot about asset bubbles, right? And how, companies can come into a situation, and again, when you talk about government picking winners and losers, this creates asset bubbles. And I think a big bubble is Amazon, a company that has been running losses for a very, very long time, still losing money, not a profitable business. But again, now with their situation in New York, what we haven't talked about yet is that they were given a 99-year lease, on the properties that they're going to be buying. What does that mean for the stock market, and what does it mean for businesses on a local level, not even, nationwide, but on the local level, when you're running a small shop, a bodega, and now all of a sudden Amazon's moving in, they're not paying taxes, and now your rent is going up and your costs to your employees are going up. How does it affect business locally when government picks winners and losers?
Well, it clearly it's maddening, and you got the small business guy who is struggling just to get his business up and running, and there's no way that they would get even a fraction of the special benefits and privileges that the large corporations get. The large corporations, in fact, are so large in part because of these special privileges. You take these tax benefits away, and you'll see a lot of these big businesses start to crumble because they are paying a far lower tax rate than the law requires them to pay. Many of them are paying nothing at all. Some of them are actually paying negative tax rates. They're getting money back from the government that they never paid in. So it's the worst case scenario where the government is directly funding a business that is paying no taxes at all. And the small business is always in danger of going out of the market because they have less capital, because they're still struggling to find investors, to pay off debts, and they're in a position where they could be very easily crushed by big business. So I would imagine that the small business community is most upset about the Amazon situation, and they've done this with other corporations. They've done this with Walmart. They've done this with Apple, with many big corporations. And to see that the small business is struggling while the big business, which is being propped up by the government through special favors, like we've seen with Amazon here, there should be I think there should be a march on these cities and state parliaments and legislative areas where people are just handing away tax dollars to the highest bidder, which is what we have going on here. So it has artificially popped up the markets, but I think the markets now are starting to wake up.
Yes.
And I do think that the people out there are realizing there's a lot that's going wrong out there.
Mm-hmm.
And it's starting to catch up to a lot of these businesses, which is why the market seems to be going down more than it's going up. And we are going to have a recession. It's one of the things I've talked about in one of my videos that I put on YouTube. A recession is coming, and the big guys are going to be the first ones to notice it. As the investors pull out and their stock price plummets, that's when people are going to realize the party's over, and the government isn't going to have the money to do these special privileges, which would be a good thing. So I think that whatever has happened so far, the small business community, which is really has reason to be fired up over the Amazon favors, they should be cheering on the next recession, because that is going to pop all the asset bubbles, all of the props that these businesses are getting, and it actually opens up opportunities for the small businesses to be bigger than they've ever been before.
Yeah, it's going to be the best thing that, the small income earner, the small business could ever hope for when this manufactured 10-year market comes falling down. And again, people tell me Sal, you're a pessimist, blah, blah, blah. Look, I don't have $10 million liquid. So the last thing that I want is for us to continue with these massive asset bubbles as these companies get more and more expensive. You're able to afford less and less of your opportunity to be able to be a part of this massive growth that's manufactured. So it doesn't help me to see the market continue to go higher. So I'm happy to see this stock market now. I hope the beginning of a collapse. We've already lost over $450 billion on Facebook. Facebook was on track to be $1 trillion company. They've lost over $400 billion in value. We've seen Apple going into its 7th week, John, its 7th week of losses. I don't know if traders are following that or not, but Apple is going into the 7th week straight of losses. Again, another company that's lost over several $1 billion since its peak a couple weeks ago. So things are changing. We haven't yet seen it in the real estate market just yet. But again, we had the Fed come out and mention that they are on track to stay with their interest rate adjustments as that goes higher. But John, we're still at historical lows. So, obviously the market's been hot since money was cheap, practically free. What are some effects that we're gonna see here at the beginning, as now these companies can't quickly turn this free money into share buybacks? What are we going to start to see here as the market starts to fall apart in the early end?
Well, there's a lot of companies out there that are hanging on by a thread, and you would never know it. They go on TV, their CEOs say, we're growing, everything's fine, we're reorganizing. They use these words to really hide the fact that they're on the edge. There's so much debt. Corporate debt is at an all-time high. I think about the over $6 trillion of corporate debt that we have right now. It's never been at that level. So what that means is a lot of corporations that you might think are doing well are actually they're one bad month away from collapse. And that is the result of like you were talking about, low interest rates, making it so easy to borrow money, paying nothing, 0%. And yeah, if you don't pay for the money that you get, and you get money for free, you can be making zero revenues, zero profits, and stay alive because you've got another money stream. You can just borrow for nothing. But the interest rates are moving up. The Fed has raised the interest rate from 0.25% to 2.25%. And I have to say, I don't think we're going to hit 5% before the next recession hits. I think it's possible we may hit 4, maybe 3%. But I don't think we're going to see 5% like we did in 2007 before the recession began. We had the Fed raise rates up to 5%. I think that everything's too weak now. There's too much debt. There's not enough growth out there. This is a slow-growing economy, despite what you hear people in the media, the CNNs, the CNBCs, the Fox News, ABC, NBC. It doesn't matter. People are acting like this is an economy that's on fire. Really, it's an economy that is sputtering. If you look at the last 100 years, this is a pathetically weak economy. Now, if you look at the last 10 years, we're actually doing better now than we were 10 years ago. But we've got to have a horizon that's longer than 10 years if we really want to see what's going on out there. So interest rates, I don't believe, are going to get as high as they did 10 years ago before the next recession begins. And these corporations, who knows exactly how much debt they have. We know their debt is at record highs, but it could be companies that you don't even think are in danger that are one bad month away from collapse.
Absolutely. Thank you for that. And one of those companies, OKTA, I've said this on Twitter, OKTA, ladies and gentlemen, you watch that right now. It's one of those unicorn stocks that a lot of people are just basically selling the dream on. This is going to be a zero stock. I'm going to say this now because I know I'm going to cut this out a year, 2 years from now, and it's going to be a zero stock. Losing money, hemorrhaging cash like crazy, and using practically free money to grow their business. This is going to be a zero stock right here, OKTA. But again, I'm looking at all of these plays, ladies and gentlemen. If we go back to the indexes, the QQQs, the SPYs, I'm looking at all these now on the screen on the weekly charts, right? So the weekly charts, they kind of give us that bigger picture where we can step back and seeing, hey, there's something wrong here. There's something wrong here. Trends have been broken. RSI trends have been broken going on 2-3 years. So we're starting a very new bearish trend, and it's getting into these longer time frames where you look at the weekly, you look at the monthly on some of these. You're starting to see there's some real weakness developing here. There's some real weakness developing here. And again, just like John said, I know a lot of the CNBCs, the Fox businesses of the world are trying to spice it up. But at the end of the day, you're seeing it day to day happening in the market. I got a big smile on my face because this is what I want to see. Again, unless you have $10 million in the bank, this is exactly what you want. I see a trader bringing up IWM. IWM is another interesting one. Let me make this quick reference. That's basically the Russell 2000. That's some of the weakest companies on these major exchanges. So all of them, for the most part, have been surviving on these low interest rate environments. They don't have money to pay dividends, right? Because they're small. They use debt to finance their businesses. In a situation where interest rates continue to grow, right? The business slows down, revenue slows. It's a wrap for those IWM companies. So keep an eye out for those guys who like to buy puts. IWM is a very easy one as we go into a more difficult economic environment. So ladies and gentlemen, put your questions, if you have some, in the chat room. I'll be more than happy to pass that on to John as we speak to him today. Again, for any new people who came into there, please press subscribe if you're new, or press like on this video. Again, check out John Bogan's links in the description below. All right. So let's moving on quickly off of Amazon. And John, another conversation that is being taken place now is Brexit. Britain leaving the EU. We had their what's the word? I know it's prime minister. There we go. Prime minister saying basically this is a way that they can kind of take control of their government again. They don't want to answer to France and Belgium and having their economy under their control. Can you explain a little bit why this matters to us and how it could affect us in the short term and long term, please?
Well, England is just making a decision to become more independent. Being in the European Union, that comes with rules. It comes with rules regarding your currency, with your economy, whether or not you get a bailout, immigration. There's rules regarding that. One of the reasons for Brexit was the anti-immigrant sentiment, because the European Union controls a lot of policies regarding the flow of resources across the international boundaries. Europe it's a small continent with even smaller countries, and the point of that European Union was to, do what basically the United States did with all of the states, is to have a central government in which there can be some continuity of policy that all the states are agreeing to. And when the policy becomes a problem for certain states or certain countries, then you have those wanting to break away. And of course, we had our own episode of this back in the mid-19th century with policy that was coming down the national halls of Congress, and states were breaking away. And here we have the same thing happening with the EU and England breaking away. There's also speculation of other countries that may follow. The Czech Republic, Portugal, Italy, France, Finland. Not saying that they're going to leave, but there has been speculation that is up for consideration in the future. So this is all about breaking away from the centralization of Europe, and it's really, I'm all for the right of any one of these states, these countries, to break away, which means now that England we could actually deal with apart from the European Union. If we want to deal with any of these other countries that are in the European Union, then we can't deal with the countries as individuals. We have to go straight to the European Union government, infrastructure. But now, if we want to deal with England, let's say on trade, we don't have to go through the European Union. We can just have a bilateral relationship with England on trade. So there's really this is more going to affect how the Europeans relate to each other versus how we relate to them, because the European Union is 20 years old, and they have a common currency, and that currency is managed by the ECB, European Central Bank. So England is basically saying, we're going to break away from that. And other countries may follow. And I think that it could be good or negative for American-European relations. It's just something we're going to have to wait and see in order to find out.
Yeah, and John, I'm really interested to see how it turns out, because, again, if the European Union does fall apart, and again, we've had organizations, global organizations, fall apart before. This has happened before. But how does it affect, I'm guessing, these currencies? I mean, are they going to, obviously Great Britain has its own thing, the British pound, but when you're talking about France and Germany and Hungary, these are euro-based countries. I mean, do they maintain the euro, or do they come out with their own currency? And how will the market be receptive to France bringing back the franc? I mean, is it going to have any value? I mean, will it be based on, will it be, resource backed, or maybe not, more another fiat currency being created? I mean, these are really serious consequences if this thing does fall apart.
Yeah, well, all the countries of the world are using fiat money, using paper money that is backed by nothing other than the decree of the people who are printing it. And I would love to see us go back to the way things were during the Industrial Revolution, where the money was backed by gold and silver, and you didn't have inflation the way we have today. You look at many countries in the world, some of the currencies of these countries are going to zero. Venezuela, for example, their currency has lost 99% of its value just in the last 5 years or so. You've got other countries like Turkey and countries whose currency is just falling off a cliff. So, the central bank, every country has a central bank that prints money, and this is all about trying to buy things that we can't afford. And when interest rates are low, all you do is weaken the currency. When you artificially depress them, I think these European countries, we really will have to see, but I would be surprised if anybody decided to issue a currency and go back to backing it with gold or silver. That's what they should do. That's the reason why Europe and America became the most powerful countries in the world. But ever since the 70s, everybody's backed off that because everybody wanted to have, governments wanted to spend more money than they could bring in taxes. Now, the ECB controls the European currency. And if they devalue it enough, that would cause many of these other countries to break out of the European Union and either create a currency for themselves, or they might actually form a new European federation. It's possible. It's possible that the EU could actually be replaced by some other European federation controlled by totally different people than those who are controlling the European Union. And it could be a new currency, different from the euro, could be backed by gold, could be backed by something different like land, for example, or could be unbacked at all. I have a feeling that the currency that is issued will not be backed by anything real because it's all about power. It's all about the ability to spend money you don't have and manipulate economies. And it may start out good. You may start out with a currency that is solid and stable for the first few years, but once you start wanting to do things like bail out countries or build up your military to a size that is too expensive to maintain, that's when you start printing money. That's when the currency starts to come down in value. And, even though we haven't had a world war in over 70 years, and I would hate to have one, but that's not out of the question. There's a lot of instability out there. And nothing would bring us to printing money more than a world war. Oh, man. Which and that would be a war that nobody would ever want to see because we've got nuclear weapons now. Yeah. And we've got countries that are, not only do they have nukes, but the ability to deliver them across the world. So if we were to see anything like that, you'll see all the currencies of the world go to zero very quickly because war is the most expensive venture mankind has ever came across.
Wow. Yeah, I saw a History Channel documentary on a possible world war. They said the death toll could reach as high as 2.5 billion people if you were to have a war similar to what World War II was today. I mean, that would just, that would set the whole world back. I mean, decades. I couldn't even imagine the kind of effect that would have on our planet. Speaking of a resource-based currency, we already have a country out there that's attempting to do that in the first half of 2019. John, I don't know if you've heard about, let me see, actually that's the wrong article, about what's going on in Venezuela. Venezuela is putting out their El Petro currency, which is backed by hydrocarbons. Basically, they are, and it's called the El Petro. And basically, they're looking to do this the first quarter of 2019. The EU has already threatened them. They're saying, hey, look, if you go through with this, we're going to add more sanctions to you. I would figure the world would want to see this, would want to see a country like Venezuela come out of poverty, right? Come out of the massive inflation and have a resource back. But it looks like the world is threatened by what they're doing. What do you think about Venezuela with this digital currency that's backed by oil transactions? Obviously, I'm sure you got to be in support of it, but why do you think that other countries are threatening Venezuela, some with violence, to, why are they trying to do that to stop them from saving their economy, saving their butts?
Well, unfortunately, you would think that people do care about the lives of others across the world. Yeah, when you learn about global politics, you start to realize that what we do internationally has more to do with self-interest and mainly with greed and with the willingness to dominate others. It has more to do with that than true benevolence of other people. Because a stable currency, whether it is going to be electronic or whether it's going to be based on natural resources, is necessary for an economy to grow. And countries often fear other countries when they do things that cause them to grow very quickly. It's kind of like the fear that people had and still have with China and with India, growing countries with over 1 billion people each. Now, these countries have a high percentage of poor people, but the people are becoming less poor. You would think that people across the world would say, this is a great thing. We don't want more poor people in the world. We want less. We want the people who are poor to come out of poverty. But see, when they do, then the whole country gets stronger, and then people feel threatened because a country that is rising, that is becoming economically more powerful, will then become militarily more powerful. And once that happens, then everybody, they've got their back up now. Venezuela has more oil than any country in the world. If they were to
I was not aware of that.
Those,
I was not aware of that, John.
Oh yes, and we hear the Middle East, we hear Russia, we hear a lot of countries who've been known to have oil resources for a long time, but a lot of people forget Venezuela is one of the original members of OPEC, the Organization of Petroleum Exporting Countries. Venezuela is one of the original members. It started with 6 countries: Venezuela, and I think Iran, Iraq, Kuwait, Saudi Arabia, and 1 or 2 others. And then it grew. OPEC started in the 60s, grew in the 70s and 80s. We started adding more countries to it. But Venezuela has been known to have oil for well over 50 years. They are one of the original members of OPEC. And if they were to tap into those resources, this country could very easily be in the top 10, in fact, I would say top 5, most powerful in the world, militarily, economically. But they went in for socialism. That's why this country is at the bottom now. You got people, 2 million have fled. this country in the past 3 years because there's no food. There's no production of food or water. And this country should be at the top or in the top 5. It's in the bottom 5 because of policies that don't allow the resources of the country to be tapped, and a bad currency, overprinting, trying to compensate for the fact that oil prices have fallen over the last several years. And, you know, when you have an economy that's almost completely dependent on oil, then when oil prices drop, how do you compensate? Well, they've been compensating by printing money and trying to pay and modernize the economy without oil revenues, just money out of nothing. So now the country is spiraling out of control. But, you know, if they do go to a solid currency, it would be the best thing they could do. It would mean a recession. It would mean that they would have to wash out a lot of debt, a lot of government debt. They would have to default. But once the recession or depression is over, that country would grow faster than any country in the world if they were to go to a solid currency.
Mm. Interesting insight there on Venezuela, ladies and gentlemen. Learned something new there. I was not aware that Venezuela is basically the largest holder of oil and an original member of OPEC. Interesting. John, I don't know if you've heard, but all the haters are out in force today on Bitcoin. And I'm going to come back to oil, but we want to just talk Bitcoin real quick. Bitcoin today losing its 6,000 support level. I mean, all the haters are out and, oh, we told you it's a crap load. I mean, blah, blah, blah. Now Bitcoin looks to be kind of fighting for its life. Now, it's still worth more than $1. So obviously somebody out there, thousands of millions of people still think this has quite a bit of value, and it's kind of come off the bottom there. But obviously, you know, debt's still rising. Fiat currency is still the standard. Is there any hope for Bitcoin? I don't want to spend too much time on this, but are we just dreaming that this could one day be I mean, it already is, but could be worth more, worth what it used to be, or is it just kind of game over for this very interesting experiment?
Well, I think the cryptocurrency craze has only begun. We got to remember they exist for one reason, and that is because the reigning currencies, the fiat paper money, has been losing value especially fast over the past 10 years. Bitcoin is not even 10 years old. And many of these other currencies are even younger than Bitcoin. And the reason they've been crashing really is because they went up so fast over the past 3 years. Whenever you have, that's a bubble. When you have a period of time where you're only seeing 5% growth a year for many years, and then all of a sudden you're seeing 30, 40, 50% growth a year, what seems like out of nowhere. And that's pretty much what's happened with Bitcoin over the past 3 years. But eventually, people start to realize that it's overvalued, and they pull out, they take their profits, the people who got in early, they take their gains, and then those who thought that Bitcoin was going to keep going up start to get out, and it comes crashing down. But I don't think this is the end at all. I think that this is just a recession in the Bitcoin market and in the cryptocurrency market. They're going through a small recession right now, and it could continue or it could end. If it does end, it will end because the paper currencies are being devalued at a higher rate. So Bitcoin is just a competitor with all the other paper money. All the cryptocurrencies, they just compete with the other. They compete with gold, they compete with silver, they compete with the euro, with the US dollar, with with the yen, with all the paper currencies of the world. And I think that it's dropped off because people who got in early have pulled out, and they've taken their profits, and it has caused a crash in the cryptocurrency market. But I think that there is new life ahead with cryptocurrencies, because as the world's debts continue to grow and the economy continues to slow and go into recession, I think the money printing of the fiat currencies will kick up. And that's when you'll see the cryptocurrency market, I believe you'll see those turn around at some point after that.
Excellent. Interesting insight. Speaking on, some of these resources, John, I want to talk gold. I want to talk gold, the world's oldest currency, world's oldest, most stable currency, most desired currency. What I've been looking at it. I've been watching it, John. I know we recently had a JP Morgan trader come out. He's going to prison because he did admit that in association with his bosses and other traders that he was paid to prevent gold and gold prices from going up. They were basically manipulating the price of gold over several years. I still today believe that gold is still being manipulated because we're looking at the massive amount of risk that's on the table right now, and we're looking at gold not doing anything here. Is there a point where things can happen where even manipulation can't hold it down, or are we looking at a product here that the market no longer considers like a safe haven? What's going on here? Why isn't gold displaying the risk that's on the table right now? Why aren't we seeing that in gold prices?
Well, actually, we kind of touched on that with cryptocurrencies. Before the last 10 years, we didn't have a such thing as a cryptocurrency. That came out of the financial crisis of 08, 09. And gold actually did very well in the years, you could say the first couple years after the financial crisis ended. Gold was on fire. I mean, it dropped down to about maybe 700, I think, in the financial crisis. And then it went to 1900 only a couple years later in 2011. And it's at 1200 now. It's been fluctuating at around 1200 for the last few years. And I think the reason is because we have competition. Gold used to, in a way, kind of be like a monopoly of non-paper currencies, gold and silver. And until the last 10 years, it was. But now we do have electronic currencies. And the people who are investing in the electronic currencies would have been investing in gold and silver if the cryptocurrencies did not exist. Because these are the people who are trying to get out of paper money. And before the last decade, they couldn't go to cryptocurrencies. They didn't exist, so they went to gold. So you would see gold spike up as inflation went up. And inflation is going up now. And like you said, you would think you would see, a bigger pop in gold. What's keeping gold down is the competition of cryptocurrencies. Now, the cryptocurrencies, as we were just talking about, have been coming down recently. So that could open a door for gold, but it hasn't really done so. And there's still faith in the fiat currencies. So we're really going to have to wait and see what the next year or two brings. But the reason gold isn't popping like it used to, I would say the number one reason is competition from cryptocurrencies. And the money that's flowing into investing in those would have been going into gold if not for those currencies existing.
Excellent insight. Ladies and gentlemen, on a 20-year basis, gold has been a magnificent investment. So I'm taking a very short-term view on gold, but when you look at gold at a macro, 10-year, 20-year level, it's been an incredible investment going back to the, 1950s, 1960s, just absolutely incredible what we've seen in gold prices since that time. Moving on. Again, if you guys have any questions, put that in the chat room. And John, I want to hit on oil just one more time here. Oil hit, just ended a 12 session loss. We recently had the worst day in 3 years in oil prices back on Tuesday. Here's WTW, I got that on the, WTI is the correct ticker. Back on Tuesday for oil. Oil is something that's monitored. Again, we've got OPEC. How do you end up with these oversupplies and something that's so, that's so monitored, that's so watched so carefully? I mean, reports damn near every week. How do you end up with these massive oversupplies that cause, these huge downturn in oil prices?
Well, I think a lot of that is actually due to a good thing, and that is technology. We have seen the improvement of oil extraction technology, much of it coming out of the U.S. I don't know if you've heard recently, but the United States has overtaken Russia as the largest supplier of oil to the world markets. It's pumping out 11 million barrels a day, I think, or 11, somewhere between 11 and 12 million barrels. And that is due to the fact that we have developed technologies that allow us to get to oil we couldn't get to before. There was oil that was further under the ground or locked inside of rocks in the earth that we couldn't drill to. And by developing what's known as fracking, the process of pumping the ground basically with chemicals, sand, and other types of elements that break up rocks underneath the earth, we can actually pull oil out that we couldn't get to before. So the ground is saturated with oil, but we don't really know that until we can reach it. And as technology has improved, it has allowed us to put more oil on the market than ever before, and you get this glut. Also, you got oil underneath the poles, the North Pole. There's ice that is melting, and that actually makes it easier to get to oil. There's oil locked under ice, and when the ice melts, it actually becomes cheaper to get to the oil underneath there. So, in a way, the whole global warming thing that people are complaining about actually works against the agenda of the clean energy industry, because as the world warms and ice melts, it's cheaper to get oil that's locked under the ice. The oil becomes cheaper, and then people who want to have cheap fuel move away from the green fuels and back to fossil fuels, which are cheaper. So that is another reason the oil price has come down. Now, there's other reasons. There's some countries that are going into recession. There's a loss of demand in certain parts of the world as a result of, countries, Venezuela, countries where the economy is crumbling, that there's less oil being used. So oil prices are being pulled down by a lack of demand, but we have an oversupply, and that is due to technology allowing us to get to oil that we couldn't get to before, and the ice melting in places like Alaska, where there's a ton of oil and a ton of ice. but the ice is melting. So it's working to bring oil supplies up and the prices down.
Wow, ladies and gentlemen, I'm talking to Jonathan Bogan, author of Say No to Big Government, My Case for Maximum Freedom. This is our fourth time we've had him on the show. I have him on while, he's about one video away from getting to CNBC and CNN and all those. So I'm happy to have him on here while I can. Again, press like, subscribe to his channel on YouTube, and buy his book. I have the link in the description. Again, the book is called Say No to Big Government, My Case for Maximum Freedom. John, let's get off the economy now, and let's talk another big, part that has an effect on it still, government. And recently we just had an election, and it's so funny because I was talking to friends of mine who were so excited. Oh, the Democrats took the House, but it's just more gridlock, and I can almost assure you that nothing's going to happen for either party, just because of the environment and the atmosphere where we are. Talk a little bit about what just happened, and what do you believe the future looks like for our government and for both parties?
So we have the Democrats taking over control of the House of Representatives, and the Republicans maintaining control of the Senate and a Republican president. Whereas before this election, the Republicans had total control of Congress and the presidency, and that is how they got the tax bill passed. Now, gridlock is the name of the game, and because it's so partisan now, and now the Democrats have the House, they can stop anything they want. In fact, the House of Representatives has impeachment power. You can't impeach, because the two chambers of our government each have their own powers. For example, we got two Supreme Court justices put onto the court, and that was because of a Republican-controlled Senate. Now, if we were, let's say, another justice leaves the court, Trump is going to be able to get his picks, his appointed justices onto the court, because the Republicans still control the Senate. So they still have the Supreme Court in their hands because the Republicans have the Senate. But the House is controlled by Democrats, and they are the ones with the power to impeach. And that is definitely a possibility. I can't say exactly when or even if that will happen, but there's been talk about it. And the House not only has the power to impeach, but it has the power to appropriate funds. So you're going to get spending bills that come up, and they're going to spend more money, because that's what both sides do now. Nobody cares about financial responsibility.
Absolutely.
Nobody cares about the deficits. We've had 3 straight years now of rising deficits in an economy that is not in recession and is not fighting a major war. I talk about this in one of the videos that I have produced and put onto my YouTube page. That has never happened before. We have never once in the history of our country seen 3 straight years of rising deficits in an economy that is not in recession and not at war, except now. And that should that should be the biggest red flag that our economy is very weak and very in danger of not being able to survive for very long in this growth period. Because when you have a growing economy, you have falling deficits, not rising deficits. And to have 3 straight years in this period, that's never happened before. And that's because both Democrats and Republicans, they are the party of big government. Both have their own agenda of spending for their own projects. The Republicans want more military spending. They want to continue fighting the drug war. They want to protect entitlements, Social Security, Medicare. The Democrats, of course, are all in for entitlements, but they want to raise taxes on the wealthy. They want more welfare. They want to raise the payroll tax on Social Security to have more money come in. They want more spending for the roads. They want free college. Nothing's free, but they want you to believe it's free. Mm-hmm. Of course, the national health care, single payer, Medicare for all, which has been pumped out by Bernie Sanders, and we got to keep an eye on him. He is for sure going to run for president in 2020 with his Medicare for all agenda, and he'll be joined by more Democrats, because a lot of these new Democrats, these younger folks, are more socialistic, because socialism is very appealing to the millennials, to the younger generation. We got a lot of younger Democrats who won, and they're pushing these spend money forever agendas, pay no attention to the national debt. So I would say look for gridlock and look for the debt to continue to explode, look for a recession, look for another financial crisis, because at this point I don't think there's anything that can be done. We have divided government, and that will certainly put us in a situation where we won't be able to change course.
Absolutely, and I guess that answers my question. I have a gentleman in the chat room, Fisher G, was asking, what do you think about a recession? Is it possible for 2019, 2020? And again, John, I'm already looking at the demographics. You're going to have 3.5 million fewer baby boomers on election day that are alive now that won't be alive and by the end of 2020 or during the election. The Democrats came really close. Now 3 million possible. I don't know. Let's give them 70%. Most of them Republican voters who are probably not going to be able to vote. I don't think it looms very good that we're going to be having an administration that's going to care about what the deficits looks like, that's going to care about our fiat money system. I think we run ourselves into the drain in 2020. But tell us what you possibly see for 2019, 2020 on the economic basis.
Well, I would be very surprised if we made it to the year 2020 without a recession having begun. By July of next year, if we do not go into recession, this will become the longest period of economic growth in American history. July 2019, that's if we do not fall into recession between now and then. That would mean that this expansion has been going on for 10 years and a month, longer than any in history. And it's possible. It absolutely can happen. If we hit the year 2020 and the recession hasn't begun, then the 2010s will be the first decade in American history in which we never had a period of economic recession for a single year in the whole decade. Is it possible? Absolutely, it is possible. But I think there's a lot working against that happening. This trade war that was started earlier this year is working against economic growth. And companies are laying people off. They're moving operations out of the country. We are seeing interest rates go up, and the Fed has indicated that they're going to continue to not only raise rates, but they're going to continue to sell their the treasuries, the bonds that they purchased from the banks, which means they're drawing out billions of dollars out of the banking system each month. During the financial crisis, they were putting billions and trillions of dollars into the banking system. Well, now they're drawing all that money back. So that's going to pump rates up. And inflation is going up. So inflation is just going to slow down the market. At some point, prices will get too high. And we're already seeing slowing sales in the housing market because the mortgage rates now have reached 5% in many cases. And that's historically not even very high, but it just tells you how little money people have to get out there and start earning a living. You go back 30 years, I mean, we had double-digit interest rates. People were able to buy homes. Now, if it goes to 5%, the housing market slows down, and we're already there. So I would just be if we make it to the year 2020 without at least a recession beginning, I would be very shocked because that's a long ways and we still have a full year to go. And I think the economy has already started slowing down. Back in the second quarter of the year, it grew at 4.1%. And everybody was jumping up and down like this is awesome. The third quarter, we went down to 3.5%. So the slowdown has begun already. And that coincides with the trade war because the trade war began in the second quarter. And it's been accelerating, more tariffs on the Chinese goods, on Canadian, on European Union goods. Now Trump is threatening to tax all the automobiles that come in, no matter what country they come from. And this is just, it has escalated, and it's working against the economy. It has already started slowing down the economy. Ford has already lost $1 billion due to these tariffs. You've got plants that have already laid off workers. So the fourth quarter, which we're in now, I would not be surprised to see the growth be down into the 2 percentile.
Ooh.
And if we have the growth go down into the low 2s, which is very likely, that means this year we're not even going to have 3% for the year. So we're slowing down already. And if we continue to slow down, we get down to 1%, 0% negative, now you're in a recession. And it can accelerate. You can have a quarter where you're at 2%, and the next quarter can be a negative. So I would be on the lookout, and do not expect us to make it to the year 2020 without a recession at least having begun. It's possible, but it is not likely that we're going to make it into the next decade without going into a recession.
Wow. Very, very interesting. John, I got a question also. What, in layman's terms, what exactly is a recession? What happens to markets, jobs? What do you typically see in a recession?
In a recession, you see businesses laying off lots of workers. You see businesses going bankrupt, filing for bankruptcy. For example, we just saw Toys R Us. We just saw Sears file for bankruptcy. And the reason really, I think it's because interest rates have moved up, whereas they were living on 0%. Now they have to borrow at 2%. They have not enough cash flow to be able to pay that off, and as a result, they have to admit defeat and file for bankruptcy. So you'll see more of that. You'll see businesses that are loaded down with debt are going to be the first ones to declare bankruptcy, the first ones to lay people off. You're going to see budget deficits for the government explode. They're already exploding, but next year we are projected to take on $1 trillion deficit, which in and of itself is not something that hasn't happened before because we had $1 trillion deficits 10 years ago. But what is totally unique is that we are not in recession, and it's quite possible we might not even be in recession next year, although most likely we will be. But to have $1 trillion deficit projected without a recession, you have to ask yourself, how much worse is it going to be when there is a recession, when the taxpayer is losing his job and therefore can't pay taxes anymore? What's going to happen? The government is most likely going to print money. So you were going to see more businesses going down. You'll most likely see bank failures until the bailout comes, and we still don't know exactly how that's going to turn out. But you're just going to see a higher unemployment, people getting kicked out of their homes because they got into a mortgage that was too expensive. Interest rate went up. They can't pay it. Maybe they lost their job. They get kicked out. You'll see more people getting their cars repossessed because car loans are now at all-time highs.
Right.
And people can't make their car payments. So
we saw a couple of years ago, John, not to knock you off here, the introduction of 7-year car notes. So there's a 7-year car note is out there now.
Yeah, that is one of the worst things about it. And really, you gotta be desperate or just totally ignorant about finance to accept one of those. Car loses so much value so quickly. To get into a 7-year loan is throwing exorbitant amounts of money away. That car is I mean, really, it's the product of our financial system. There's so much money to lend now, and those are for risky borrowers. Because, hey, you want the car payment to be small, you got to stretch it out from 3 years to 7 years. But really, you're just making a killing off the person because they have no means of getting a better loan than that. So they're especially vulnerable. And these are predatory. Those 7-year car loans are predatory. And in those loans with the high interest rates, those are the first people who are going to be losing out. When the recession hits, they lose their job. There's no bailout. You'll see a lot of people going down, businesses and governments going down. And then I think there might be a frenzy to print money because the recession might be so severe. And I believe it will be very severe, more severe than we've seen before. Then you'll see skyrocketing inflation kick in at some point. But a recession is all about people declaring bankruptcy and admitting they don't have the funds to pay for what they've borrowed. And prices do go down when you have a recession because demand has fallen. Demand is being reduced as a result of people losing money in the stock market, real estate market, losing their own personal incomes from their jobs or their businesses. Prices fall, businesses go under, and then the governments can decide to let it finish, to let it play out, or print money to try to keep it from happening. And I think they're going to do the latter because historically that's what they have been doing for the past 50 years.
Ladies and gentlemen, that is where our country is. I saw someone mentioning to avoid all this, they can trade penny stocks. Now, actually, during a recession, the worst stocks to trade are going to be penny stocks, particularly the ones that are on your publicly traded exchanges like the NASDAQ, on these higher level tier exchanges. You're going to want to stay away from penny stocks because those are going to be the big losers in any kind of recession. OTC is a whole different beast, but yeah, your NASDAQ, your Amex stocks, penny stocks, they're going to be the worst places to be in a recession. John, again, now that we're going to wrap this up, maybe is there something you kind of want to say to the American people that are out there listening to you? We got a full house in here. Maybe talk a little bit about your book or just a little bit of yourself, something you want to add?
Yeah, well, I do appreciate the opportunity to just give what I know to the people. I want people to know if we just had an election and we made the same mistake again, we voted for the same people. We voted for Democrats and Republicans. Do not expect anything to really get better economically over the next several years because you can't have new policy with the old people in office, in the old guard in office. You've got to get new people with new ideas. And in particular, ideas that say governments has to get smaller, taxes have to go down, regulations have to be abolished. You need to have a strong currency, not based on how much the government can print, but based on something that is scarce and holds its value. If we continue to elect Democrats and Republicans, we're going to continue with the same economic problems that we have, the same boom-bust economy that is very volatile, very unstable, rising debt, rising threats to the entire marketplace. And it's just, you know, that saying, if you do the same thing over and over again and you expect a different result, you're insane. So we are doing that. We need libertarians getting elected. And I know people say, well, but I'm wasting my vote if I vote for a libertarian because they can't win, they don't have any support, and I've got to vote for the winner. A vote for someone who wins, who is not working on your behalf or in your best interest, is a wasted vote. Or if you choose not to vote at all, when there are libertarians on the ballot, that is also a wasted vote. You don't waste your vote voting for the person who is working for you. You waste your vote by voting for someone who is working against you, or by not letting your vote count in a close election when there are people on the ballot who are on your side who need your vote. So I am just incredibly disappointed that, once again, we did not see any libertarians get elected, even though we saw them running for office and even getting into some of the senatorial debates. They did not get any significant support. And the same Democrats and Republicans who believe in deficit spending and government giving away favors and tax benefits to big corporations, both sides do it, and they have won again. So I am pretty pessimistic about the outcome of this election, but I am optimistic that we still have the right to vote, that we still have the right to participate in politics, and the real question is, are we going to change course? Are we going to decide to continue with the same people, or are we going to go with people who know how the economy works, who know why government should not be manipulating it? Are we going to go for libertarians, or are we going to continue with the same Democrats and Republicans who put us in this mess and who are going to continue to dig us deeper into it? So I want everyone to, you can learn so much more by my book, Say No to Big Government, My Case for Maximum Freedom, on Amazon for $18. My YouTube page, Libertarian Black Man, that is the title of the YouTube page, as well as my Twitter page, same name, Libertarian Black Man. I upload videos onto the YouTube channel and the Twitter page a few times a week, and I just give a few minutes on each subject. These are not long videos, 15 minutes or less per video, and I just give my take on what's going on in the economy and how we really should be looking at the news. Because the news people, they're there to entertain you. They're not there to inform you. They're not there to educate you. They're there to keep you glued to the screen. And anything that is silly, it doesn't matter. If you're glued to the screen, it works for them. So they're not out there helping you. They're out there helping themselves. If you really want to know what's going on, go to my YouTube page, Libertarian Black Man. Subscribe to it, my Twitter page, Libertarian Black Man, and my book. Purchase it on Amazon. Say No to Big Government, My Case for Maximum Freedom.
There it is, ladies and gentlemen. Again, thank you so much, Jonathan Bogan, for coming on. Again, click on his links there in the description. I got an article up here, ladies and gentlemen, by Janice Henderson. This is an investment bank. These people don't care about anything. They don't care about you. I mean, this is an article they just recently put out calling for a bullish path for stocks paved on what happened during the midterms. And again, we just had Jonathan break that myth, or this is basically just a bunch of BS. These companies could care less about you, just to continue to have you put more and more money of your fading wealth into the stock market, so they can eventually take it away from you, because that's how they make money, on fees and on these over leveraged stocks. Ladies and gentlemen, again, I think we made the case for gold. We've made the case for a lot of things today. And again, I want to thank my guest, John, for coming on to the show today. Someone asked me, what's your take on penny stocks? I know, John, that's not your lane, but do you have anything to say on penny stocks for the most part, or?
Well, if you're looking to invest on a budget, definitely start there. Interesting, I think I mentioned earlier that Sears is now a penny stock. You can buy Sears, if you go to the looking for penny stocks, because Sears, they're I wouldn't necessarily advise you to do so, because Sears is
it's a bankruptcy
on
right
it. Yeah, but there are some companies. You start out as a penny stock, you're a small company, and you get enough investment, and you can start growing. So, these big companies, I mean, Amazon, you're talking about spending a couple $1,000s a share. That's really for your, top 1%, 1/10 of 1% investors. So, I think penny stocks are a great idea just to get started. And then as you start to learn more about how the stocks behave and your risk tolerance, you can start moving into higher priced stocks. But I think starting small is the best way to go when it comes to investing.
Yeah, I mean, Sears right now, bankrupt company. They do have the Qs. Qs are very dangerous to trade, so just be careful with that. Guys, if there's just one penny stock I can talk about, it's Nokia. I like Nokia a lot. They just got a $3.5 billion contract to provide T-Mobile for basically all their 5G equipment. They're going to be the largest provider of 5G transmitters in the world. The stock's trading at $5. The company is debt-free. It just makes it's a smart trade here. But again, this is not something that you're gonna buy in the next week and sell. This is gonna be something that, again, very, very undervalued company, $32 billion market cap for what it's going to do over the next 10 years. I think you're talking about a company that's going to be 20, 30 times the size in market cap wise 10, 20 years down the line. But this is a buy and hold when you're talking about Nokia, probably the legit penny stock that I would tell somebody to go in if they had a very long-term outlook on the economy. All right. But if you're going to start off for those new traders, I would, again, very good penny stocks or options. All right. But I'd love, to see more people get into options first. But again, thank you so much to John for coming on to the show. I'm going to be live again tomorrow, where we're going to talk about this market. We're going to talk about Apple. We're going to talk about what happened in natural gas today, unless that was just, something that's just an anomaly. So we'll talk about a little bit about natural gas and some of the other, currencies, as well as, rocks and all that stuff. You guys know what I'm talking about. We'll talk all that tomorrow. But again, hit up those links in the description. Follow my man John Bogan on his YouTube page. Shout out to all the people who came and joined us today. Fisher G, thank you so much for all the questions. I want to make sure I got everything taken care of. Yeah, we hit all our points today. So again, John, thank you, bro. I appreciate you, man. Thanks for coming on.
Absolutely. I appreciate it and look forward to the next time.
All right. Take care. And again, I'm going to let John go. Thanks a lot. Thanks a lot. So, yeah, shout out to everybody who was in the chat room today. And I hope you really enjoyed this episode. Those of you guys who are watching it now and in the future, I really hope you enjoyed this episode. I'll be back tomorrow again live. And then I had a video on my trading strategy that I'll put out that I've been using now for a good 8 months. And you guys know I don't really talk the pennies as like I used to, because I've just made so much more money on these options. Somebody said, yeah, once you go with options, you can't go back to penny. It's hard now. It's hard for me to go back into penny stocks because I'm doing anywhere between 6 to 10K thousand trades, $10,000 trades. I just, to go for what? For what? So I'm going to have a show I'll post, and then another show that I'll be live, which will be later in the evening. Same time as always. Closing time, ladies and gentlemen. Appreciate you for coming. Stock Z, Lord Yase, appreciate you. Rich Millions, thank you, sir. Michael Black, appreciate you. Sloppy Bukaki. I had to Google what that was. That's some sick ass shit, man. I had to Google what the Bukaki was. That's pretty disgusting. Who else was in here? Six Vision. Appreciate all of you guys. Matt Hollenbach, appreciate you. Yes, indeed. Somebody said, what do you invest in during a recession? You invest in commodities, sir. In a recession, you invest in commodities or commodity-based stocks. All right? Or energy plays. Energy, because, everybody still needs to pay their energy bills, so they're cash rich, and they have a tendency to pay dividends, so really good during a recession. Especially if you're wealthy, you move into those kind of plays. All right? I'll be back tomorrow. Until then, ladies and gentlemen, A Ranger, Backyard Specialist, appreciate you. Market Moves, thank you. Alan Sebro, appreciate you. Andrew Medina, thank you. See you guys tomorrow. Take care.